bring in economic strategist Frances Stacy to help break this all down. Frances, thank you so much for your time. Explain what we are seeing right now with this market reaction. What does this mean when it comes to investors? How likely is it to last?
Okay, so before the election outcome, there were kind of three outcomes possible. I assumed that if Kamala Harris won, that there would potentially be some tax selling to take those gains into the end of the year because the markets would have assumed that she would raise taxes. If there was a contested election, then it would have been probably a catalyst for a massive sell-off. A Trump win obviously has equities flying, but it's hurting the bond market, which is so interesting. And I think that what's happening, and we're going to wait to hear from Jerome Powell on his rate decision, but I think what's happening is that it's baking some inflation back into the system, and it's ameliorating the expectations for rate cuts. And the reason it's doing that is because mechanically speaking, Trump is obviously going to raise tariffs. He's going to lower taxes, so that brings down the federal revenue. The tariffs bring up the revenue, but some market participants are concerned that that's going to flow costs through to the consumer. However, I will say that even though fiscal spending is probably going to remain strong because you can't cut it too drastically too quickly, it's a very key component of GDP. Elon Musk has said that he's probably going to somehow take $2 trillion out of the fiscal scenario. And that is actually deflationary. And so if they continue to do that with the fiscal, mechanically speaking, that should counteract the inflationary narrative that's happening in the markets right now, and particularly the bond market.
All right. So, Frances, so many Americans right now, if we just break it down, they are stressed about the higher prices we are paying for so many goods and so many services. But do prices ever tend to go down? We're seeing, the markets go up. Are prices actually going to go down?
So this is what's really interesting. So you have inflationary, then you have disinflationary. Disinflationary means they're going up at a slower rate. And when they took the inflation rate from 9% to 3%, it's still that 9%, those price increases are already baked in. Now they're just growing at a slower rate. So prices are still continuing to rise. Until you have disinflationary forces in the markets, you don't actually have prices falling. And I think the key component is Elon Musk did an appearance on the All In podcast, the Tech World podcast. I think it was about 6 weeks ago. And he really talked about changing the operating system where the fiscal spending participates so much in the gross domestic product into moving into empowering the private system. It's just going to be how messy the changeover is. But I'm very excited. And, particularly sitting on a committee where we look at global digital finance, I'm particularly excited to potentially work with this administration on, ushering in the era of global digital finance. And Trump is very pro crypto. So obviously you see a rally in crypto. Gold is selling off today because it's taking the volatility and the haven assets and the risk out of the market because we definitely know now who the president is.
All right. So, Frances, I want to zero in on something you just said there. It depends on how messy the changeover is. How messy could that get? What could that look like just for everyday Americans?
Yeah, it's going to have to be done carefully. I really have a lot of faith in Elon Musk. You can't argue with his success. Even if you want to say anything about him, you can't argue with his success. And I really know that he's going to have his eye on the mechanical issues. And he was pressed on that in that interview. You cannot just rip the fiscal spending out of the system. And the reason is the high fiscal spending is the catalyst that counteracted the Fed tightening. And that is why we are not in recession, because the fiscal spending kept everything liquid because it continues to add money to the system while the Fed is trying to pull money out of the system to control inflation. And so I can't say because I don't know exactly how they're going to do it and how drastic, but I'm thinking that mechanically he doesn't want to break the system.
Right.
So I think that they're going to do it very slowly. I hope they do it very slowly and very methodically, but I just have a ton of faith in him. And I also know that, he has a lot of integrity and I don't see him sort of kowtowing to anyone. And so I'm looking forward to see how he's going to adjust the system.
All right. Well, last question for you. When some of these, economic trends that we are already starting to see now potentially really start to kick in a few months, who gets to take credit for it?
Well, that's all, yeah, that's sort of a tough question, right? Basically, the way that I look at the system is typically not politically. I look at the system as being mechanical. We had an inverted yield curve for over 700 days. That hasn't really occurred since 1929. Usually that would project a massive recession, but it's like a domino effect. You have to have a catalyst that ticks off that first domino, and we haven't yet had that. I did speculate that if we had a highly contested election, that could be the catalyst. You know, back in the previous recessions where you had this inverted yield curve, you had Kuwait, you had the tech bubble burst, you had the housing bubble burst. So if we have any kind of a catalyst in the credit market, I think those mechanics are still in play. I think even though you can revolutionize cars as Elon Musk has done with Tesla, you're still dealing with axles and wheels. And I think mechanically the credit markets are the same despite being post-COVID. So the fiscal spending has kept the mechanics from playing out into a recession. And the Trump administration, in coordination, and also Jay Powell, they're going to have to watch this very, very carefully, because if you drop the liquidity too quickly, you can tick that domino effect off. Then you will get a recession. And then who's to blame for it? Is it the overspenders who can take the money out of the system but can't take the debt? Or is it the person that pushed the catalyst? Kind of remains to be seen.
All right, so maybe the blame and some of the credit gets to be spread around.
Right.
Economic strategist Frances Stacy, thank you.
Thank you.
Up next, Trump